with nearly a fifth of the S&P 500 set to report, and gold prices, as we mentioned, are climbing once again. Let's get perspective now from Clark Geranen, Chief Market Strategist at Cal Bay Investments. Clark, thanks for joining us.
Thanks for having me.
I guess just overall, let's get an overall picture of what's pushing the markets right now. What are we looking at?
So from my perspective, we have Rams pushing the market right now. And really that's rate cuts, AI integration, merger activity, and strong corporate earnings. So the combination of all of those are really kind of pushing up against a lot of the headwinds that we've faced this year. So we like to see a lot of this movement going forward. And although we've had a lack of transparency over the past few weeks with the government being shut down, we do still think that we're moving in the right direction.
Let's talk a little bit about each one then. First up, rate cuts. We're looking likely at another rate cut in the States. And I'm here. We're kind of a toss-up, I think.
I think odds right now are for 2 rate cuts through the end of the year, but my perspective, I think we're only going to see 1. And I think some of that comes down to the lack of transparency we've had. So now we don't have any public data, and we've just been relying on a lot of the private data. So I think that's going to leave the Fed with sort of a large decision here at the next meeting. So while I only think 1 cut this year, I think as we move into next year with a new Fed governor and President Trump obviously going to have a large influence on that, I think over the next year, we're going to be looking at continued rate cuts. And so I think the market is going to continue to bake that in.
Okay, and then moving on to AI, I'm sure everybody thinks we're on a bubble. We're not on a bubble. Are we peaking, or do you think there's more room?
I still think there's a lot more room to run. Clearly, some people say you don't really know when it's going to burst, but we do feel that there's still so much more room to run. And that's where it comes back to retail investors and just making sure that they're cognizant of how much risk they're actually taking. Because there is so much overlap in AI and some of the large tech companies that many of us have in our portfolios. I think it's a great time for investors to really evaluate how much risk they're taking, because a lot of them don't realize how much they're taking.
All right, we're going to talk a little bit more about AI in the tech sector. There's a lot of reporting this week, but just to finish off on the M there, mergers and acquisitions, what are you seeing that you like?
Mergers and acquisitions, we thought at the beginning of this year that this was going to be one of the main drivers of the market. And now as we've seen rate cuts start to take effect, we've already seen this happening with some banks. And as we've seen some of the smaller banks and or cockroaches out there, as we've seen them some of them struggle, I think we're going to see even more mergers and acquisitions, especially on the financials.
Okay, and then let's start talking earnings. This is one of the big weeks for it. They've been mostly positive that we've seen, but we'll see some of the big tech companies coming out. What are you expecting, and what might be a disappointment for people?
So believe it or not, we're actually expecting earnings to continue to beat expectations. And that's kind of been the theme throughout the year. Everybody's put their expectations pretty low just because of the headwinds that we've all seen and gone through this year. But we're still anticipating greater and greater earnings. We saw that with financials last week, and I think we're going to see the same thing with tech.
Would there be numbers, though, that people might pause on, even if they are positive?
Yes, I think even if they are positive, people are going to pause. And that's just because of some of the lack of transparency that we have, not only in not having certain government numbers on inflation and employment, but I think also this general sense of unsureness with where the market's going and the so-called AI bubble. I mean, since the government has been shut down for the past 3 weeks, the market has just moved sideways. So we've seen the markets move sideways. We've seen gold continue to go up about another 20%. And Bitcoin, actually, on the other side, has been much more volatile and has come down since that point. So I think market's going to continue to go sideways until we either see 1, greater earnings, or 2, more transparency in the inflation and unemployment numbers.
And with it moving sideways, you feel there are some opportunities. What sectors are you looking at?
So like I said, we really feel strongly about financials. I think there's going to be a lot of merger activity moving forward, along with a forecast of rate cuts. So financials have actually performed even well, even during the period where we had rate hikes. And so as we move forward, we really think that financials are going to benefit from this. And then I think there's obviously the AI play. As long as you have the correct risk profile and understand exactly how much risk you're taking, then I think the AI play is still going to continue to work out, as we've seen with a lot of these large tech companies continue to crush their earnings.
And what are you looking at for a risk profile right now?
So as far as a retail investor goes, risk profiles can range from anywhere to very risk averse to extremely high risk. So for somebody who's young and has the time horizon, this is a great time to have a heavy concentration in AI. For somebody who's heading into retirement, this might be the time to, maybe not take a look at the private credit fund that just became available to them, or invest in one of a speculative AI companies. And I think that's where the transparency comes back, is where a lot of these funds, say private credit, have been become available to retail investors. It's not something that they understand. And really, if you don't understand it, or if your financial advisor isn't able to explain that to you, then it should be an area that you should stay away from.
Okay, and tied in with that, I guess, cash and fixed income. What's happening with that sector? Because everybody, I'm sure, are looking at the markets and seeing the opportunities there. But do they still have a place?
So cash always has a place. Obviously, we've seen rates start to come down. So a lot of people had money sitting in money market or CDs, but that's no longer going to be the play moving forward, because we've been sitting on such high short-term rates over the past few years. I think investors have gotten used to that and very comfortable with that. So I do think part of the drive for the markets is going to be a lot of money moving over from these money markets and CDs back into traditional equities.
So fueling further growth then?
I think so.
Okay, Clark, thank you very much for joining us today. We appreciate it.
Thank you.
Clark Geranen is the Chief Market Strategist at Cal Bay Investments.